If you want to get your money to work for you as a first responder or shift worker, stay tuned. Welcome back, everybody. We got another video here on Firefighter Finance. Today, I just wanted to go over, some brief investing principles that have worked for me and that, I think are pretty well suited for first responders or any people that just don't have a lot of time on their hands to, sit and scroll on the computer and figure out what to invest in, right? It's maybe you have experience investing, maybe you don't, but this will be a good video just to kind of, get a foundation, right? So with anything, always have an emergency fund to handle small emergencies. Life happens, right? We all know that. So take care of that. I think what's worked for me first is getting what's called a Roth IRA. It's an investment account, right? And you can get on Fidelity, Vanguard, Schwab, any of those large places, anywhere you can open a Roth IRA. And it's a place where you can contribute right now up to $7,500 per year. It could be larger, I would have to look, but it's around $7,000 to $8,000 you can contribute into that account. And then within that account, you can invest that money however you see fit. For me personally, I like index funds, such as, VOO or any, large Fidelity or Vanguard low cost index fund. It takes, the 500 or 1,000, however many companies that particular one has, it takes all those into a fund. So you don't have to sit and research, right? It has all these different stocks. If one doesn't work out, one will work out, you know what I mean? So it's very diversified. You don't have to sit and research and worry about certain companies because it has pretty much all of the good companies. So that's what works for me. I like, VOO or, the Fidelity Index, 500 Index. Those work great for me, right? So, I take my yearly income, I try to subtract what, I got to spend for bills and then a little bit of a cushion for any emergencies or anything. And then I try to live frugally and take that extra money and, invest it. Always try to, max out your Roth IRA. And then if I have any extra money, since I've been investing for a while, like I've definitely learned at least the basics of reading a company, figuring out what I think is a good stock. So I'll throw, a little bit of extra money into some individual stocks. The stocks I like include, Meta, Nvidia, Tesla, those are the big ones. And then some dividend, investments like Lockheed Martin. That's a big one for me. Raytheon, Pepsi, Coke, those kind of things that will pay some income. So that's always nice to have a little bit of passive income, but those really come second to the index funds. I really feel strongly about index funds. They have an 8 to 10% return. You don't have to worry about it. You just, you invest what you can into it. That's what I did. And you just let it grow. I'm not big on, chasing the speculative things. It's just, you don't really know. Nobody knows, not even Wall Street knows what the market will do day to day. But we do know long term throughout the course of U.S. history that the stock market, it always goes up. Maybe not year to year, but over decades, and long term it will go up. So that's what my opinion is. I don't short, or I don't like do options tradings or, day trade. I just don't have the time for that. I like to buy an investment and not have to worry about it and let it do its thing. And there's some different things you can do about it. If you have a bunch of money saved up, you can either do it all at once, or you can do what's called dollar cost averaging. So maybe once a week, once every 2 weeks, once every month even, just put money in. So that way, as the stock price goes down, up, down, you're not risking putting all your money in at once and then losing it. If you buy it over time, in theory, you get a more fair and average price of the investment over time, but that's just up to you and kind of your financial situation. But yeah, good index funds and, being aggressive, especially if you're young, like me, I got a long time to work. So, investing when you're young, it really allows that compound interest, right? Things grow, they pay dividends, those get reinvested. your investment grows in value over time. It's like a snowball, and you need more time to do it. The more time and the more money you have into it, the larger it will be. So starting now, right? I was always told start yesterday, but the best next time is today, right? So that's just what has worked for me. But you always do your own research, right? Know what you're buying. You know what I mean? Pay attention to the macroeconomic situation of our world, right? With like the situation in Iran, different, situations with AI, like pay attention to those big things, and those kind of things can help influence, where you see fit. Everyone's opinion on the world and where it's headed is different. And so everybody's investing strategy is different. So as far as picking individual stocks and whatnot, that's where you really need to do your research. And same with the index funds, right? Know what you're getting into, know how it works. But that's just what has worked for me. Always do your research. As far as what investment places, I really like Fidelity and Schwab. Those are really good large places. If they were to fail, then there would be a lot more things going on in the world than just that. And I encourage people to set aside, money and then invest it in whatever they think. What's worked for me is index funds and individual stocks occasionally at a small percentage, just to capitalize on, a certain stock working out if I see fit. But always do your own research. That's just a basic kind of way it works. I also like Bitcoin, but I don't really like any other cryptocurrencies. I just think Bitcoin is kind of the foundation of crypto, and everything else kind of comes off of Bitcoin. So like if you look at the history of crypto, the whole market follows Bitcoin. So that's kind of what's worked for me. There's ways to buy Bitcoin in an actual index fund, such as Fidelity. I think it's their True Bitcoin Origin Trust, FTBC, I'm pretty sure. So it's a way to buy Bitcoin on the market, so it's insured, right? Like the company Fidelity owns the Bitcoin, and it's in a trust that you buy. You don't actually have to buy the digital Bitcoin and have to secure it on your own. Much safer. There's pros and cons to it, but I think for the majority of people, if Bitcoin is something they're interested in, potentially looking into those, those index funds, the whole Bitcoin could be a good option. That's what I like to do. And then just being smart, right? The best time to invest is every day, in my opinion, right? Because I'm in it for the long term. I'm not looking to find some crazy stock that's, like I just don't have time for that, right? Traditionally, when the stock market's down, that's the best time to accumulate more shares of what you're buying because it's, it's low, it's at a discount. That's the way I see it. Mainstream media won't portray it that way. When things are down, they're going to say like, hey, sell this, get rid of this. But it's kind of reverse psychology. When things are down, that's usually when you want to accumulate more. And when things begin getting really overpriced, that's when it's time to look at potentially shaving your position or, looking into something else if that's what you're into. But what works for me as a firefighter and someone with a busy lifestyle, I like to invest and not have to worry about it all the time, kind of set it and forget it. A Roth IRA is a great way to grow your wealth on a tax-deferred basis. Got to pay taxes when you pull your money when you're retired. So that's a huge thing. It's really, really strong, and that's why the government puts a limit on it. So if you guys got any questions, drop some comments down below. There'll be more videos coming. If there's anything you'd like me to go over, then leave that down in the comments. And for now, take care, guys.